Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. While Indian equities may start the fresh week on a cautious note out there, Karnataka Assembly election results were largely in line with street expectation, with Indian National Congress emerging as the winner. The impact, however, may just be sentimental in nature. Wall Street, on the other hand, clocked a second straight weekly fall out there, thereby having a bearing on the Indian equity markets when it comes to the impact in terms of global cues out there. SGX Nifty trades lower at this point of time, hinting at a gap down start in Indian equities. Asian stocks too have got on to a cautious start as investors brace for a China policy rate decision out there. Traders also await cues from the US Federal Reserve officials to vindicate market pricing of rate cuts this year. Reuters expect medium-term policy rate to be left unchanged despite disappointing data last week. In terms of the FII data out there, they've been buyers again after a brief pause out there. They've bought shares to an extent of around 1,014 odd crore. In terms of DII strength, they've been selling. They've sold shares worth around 922 odd crore on May 12th. PBR, Astral, Plyboards International, along with MK Global, Kalyan Jewellers, Pfizer, Procter & Gamble Health, Skipper. These are some of the companies which will be reporting in the numbers today. So do keep an eye out in this one. But let us get going and discuss some stock and strategies with Prashant Sawant, founder Catalyst Wealth out there. Good morning there.
Hey, good morning, Nickey.
You've resumed after a very long vacation that you've had. In between, a lot of things have happened in the market. For example, the Karnataka Assembly elections out there, the FII data trend that has been holding up. What's your assessment on the markets right now and the strategies you think the participants should undertake at this point of time?
I have been on a vacation, but always connected to the market. I don't take a vacation on that front. So coming to the indices, I think we should always try to compare the event which happened previously. So if you look at what happened in May 2018, you can very clearly see that we had formed an intermittent top, which kind of went on for the next 15-20 days till the monthly expiry. So my view today would be, if I talk about Nifty futures, we closed somewhere around 18,330 on Friday. So if we come anywhere near to 18,400, 420, I think that would be a good level to book profits and wait for a dip, because I think that happens to be a major resistance and the rally has been very strong. So if the rally has to continue, a sensible dip happens to be a good level to enter. So my suggestion would be to book profits for those who are holding longs around 18,390, 400 levels in futures. And as far as the downside supports are concerned from a positional level, I think 18,200 in futures happens to be a make or break level. So we need to be very cautious with that. Positional longs, they should have this stop loss. But when I look at Bank Nifty as compared to Nifty, I see a little bit of more strength. The main reason here being Axis Bank, which had underperformed for a long time. But if you look at it now, I think it has kind of shown early signs of breaking out of a zone and it closed above 900. So if it sustains above that today in the 905, 910 zone in spot, I think it's ready to move to 950, 960 levels. So this would be a very strong mover and it can single-handedly move Bank Nifty considering the weightage. So I think for Bank Nifty, where we closed around 43,800, 43,500 happens to be an important stop loss in futures. And the level I'm looking at in the next 1 or 2 days would be a major level of 44,000 to 44,100. Overall, my suggestion would be if you come across these levels today, it's a better option to book profits and look out for stock-specific opportunities, because index may be in a little consolidation zone for the next couple of days.
All right, so that's the word coming in. Be a little cautious on the positional, trading bets out there. But in terms of specific stock opportunities that we have, that can also be profitable bets out there for the viewers. Prashant, your take on that one?
Yeah, also definitely I see a mix and match strategy. And my first pick for the week would be Indian hotels. I think here in spot, you can keep a stop loss at 249 on a closing basis. If you close below 249, I think that would be the exit point. Till then, I think we are headed to levels around 285 to around 290 as well. So, 385 to 390. and my stop loss would be 349. So that's my first pick. My next pick would be a positional one. I think it has shown a breakout, which is FDC. My stop loss here would be 270, and my target would be around 350, 345. So that's a good risk to reward. And my last pick would be a stock which has moved very well in the past 1 year. It has taken a dip now and come to a support. That is PFC, Power Finance Corporation. And I think my stop loss here would be 158 for a target around 172 to 175. So all my three strategies would be buy. There will be stock specific strategies. And as I said, if you get any opportunity, book profits in index and look at stock specific opportunities for the next couple of days.
All right, so FTC, PFC, and Indian hotels. These are the three bets that Prashant has for us this morning. But I'm going to address the top movers of the day and then get back to a discussion with Prashant with the opening bell out there. In bunch of stocks that we'll be discussing this morning will include the likes of HPCL, Tata Motors, DLF, Vedanta, and Adani Group of companies, amongst all the others. But first, I'm going to start off with Adani Group of companies because that is expected to be in focus. A bunch of development, host of development coming in on that one. First one, of course, the Supreme Court offering in the 3-month extension to SEBI on Adani Group case. Now, Supreme Court has expressed reservation about the regulator's request for 6-month time frame. Well, that's a mildly positive, not exactly what the plea was. The plea was for a 6-month time frame to assess the actions out there. But rather, Supreme Court has granted in 3 months relief coming in on the entire SEBI, particularly checking on the regulatory and the reservations out there. And in terms of the fundraising plans, now you do remember the fact that back in Feb, we saw Adani Group of companies going ahead and cancelling that FPO and returning the shareholders' money. And do bear in mind the fact that the FPO was fully subscribed out there. It was on account that the action was triggered on account of the sharp correction in stock prices, which was triggered by Hindenburg report, which also saw the audit coming in. Now, Adani Transmission over the weekend, the board has gone ahead and approved a proposal to raise 8,500 odd crore via QIP out there, and also Adani Enterprises. The board has agreed to raise around 12,500 crore via QIP. So there is net, the entire Adani Group company is going to be raising in 21,000 odd crore. The pricing remains important. So do keep an eye out on this one. Wouldn't be surprised with a good reaction coming in on that one. So these are a few of the counters, Adani Group of companies at least expected to be the stock of the day or the group that is expected to be in focus. HPCL also has reported good set of numbers, right? There is a GRM beat which has come in for HPCL. Net profitability, the company has reported net profits, it's around 3,222 odd crore as compared to 172 crore sequentially. Also, if you talk about the revenue, it's a little down out there, 1.5%. But EBITDA, if you see that number, we're seeing significant improvement coming in on the margins profile of the company, operational performance of the company. EBITDA has come in around 4,798 crore as compared to a number of 1,290 crore sequentially. The margins have come in at 4.5% versus 1.2% sequentially. What MOSL or the other brokerages technically have a view on this one is that the higher than expected GRM has led to the beat, and the PAT is higher on account of higher than estimated other income. Now, essentially, GRM for HPCL have been lower than that of OMCs like IOCL, BPCL, owing to the ongoing expansion that it has taken in at the Vizag refinery out there. In fact, HPCL has the highest leverage if you speak about the marketing amongst the OMCs out there. This, in turn, is expected to benefit the most due to improvement in marketing margins, which is exactly the trend playing out for HPCL this quarter around. Tata Motors, there is an operational beat out there. EBITDA is up by 58.3% at a number of 13,115 odd crore. Now, do remember the fact that the number was around 8,200 odd crore in the corresponding quarter. The margins have shaped up at 12.4% as compared to 10.6%. Overall, it's strong beat coming in from Tata Motors. JLR has targeted to cut the net debt in FY24 in this entire financial year. The EBIT margins are expected to improve. The free cash flow is expected to improve. Overall, you've seen that margin improvement across the key businesses, be it in terms of JLR, be it in terms of CV, where the margins are in fact now sitting at a 17-quarter high, or the passenger vehicle business. You're seeing that improvement coming all. DLF, the quarter 4 profit is surged by 41% on healthy operating margins out there. That's on account of fall in raw material cost, other expenses. All these things are playing out on the operational performance. Revenue, however, that's slipped by 6% out there. Vedanta, revenue in line, beg your pardon, revenue is a bit higher than estimates, and it's EBITDA, which is in line. So it's, fairly as per what the expectation was when Vedanta is concerned. However, the cost of production for this one is set to decline as the coal linkage has improved out there for the company. Colgate volume trajectory continues to remain subdued at this point of time. So net, what we're going to be tracking in this morning will be Adani Group of companies. We'll be tracking in HPCL and also Tata Motors. These are some of the counters out there which are expected to have some amount of traction building in on account of the results and the development that Adani has reported thus far. But we're going to be addressing in the markets open for you just to see how the trend has been stacking up. And if we are looking at a cautious start, yes, we are. The Karnataka Assembly elections results probably is weighing down on the sentiment right now. We're seeing that trend overall playing out on the markets, to be honest, out there. Nifty 50, it's a little down and out with losses of around, I would just say it's a flattish start, nothing sort of a start, with the levels of around 18,300. It's gyrating between that, green and red profile right now. Basically, it's just a flat start where Nifty 50 is holding on to that 18,300 mark. Remains to be seen if that level is maintained for the day out there. Bank Nifty, let's pull that up, and then we address the mid-cap, small-cap gainers and losers out there. Nifty Bank, we're seeing a flattish trend even playing out for that one. Nothing sort of a start for Bank Nifty Index. It's a cautious start in line with the regional counterparts that we have. Slew of economic data out there. Apart from that, you're seeing the Karnataka Assembly elections. It's a bit of sentimental impact. I wouldn't think that the directions per se would change on account of that, but clearly some amount of sentimental impact is what we're looking at the markets right now, which otherwise have been faring well for you. Talk about mid-cap index, talk about small-cap index. They've been outperforming the larger counterparts thus far. And in today's trade, they're pretty much in sync with the larger counterparts. And if you talk about the mid-cap index, small-cap index on the other hand is a little bit of outperformer of sorts, right? I mean, it's holding up with gains of more than 0.1% out there, and the otherwise lackluster trading session out there. If you talk about the other, in terms of the sectoral indices that we have, realty index is something that we like to watch out for. Auto index, Tata Motors reported good set of numbers. We're seeing gains to an extent of around almost 1% out there. Realty index, on the other hand, almost again to an extent of 1% out there for that index. That's shining in green, bright early this morning. Metal index, however, has taken a little bit of profit booking witness on that index, down and out with losses of less than 0.75% out there. IT index also has been holding up with gains of around 0.1% out there. Advances and declines. Advances, 28 advances as compared to 22 declines out there. And if you could just talk about the top gainers and the top losers out there, I'd want to see how HPCL is shaping up, how Tata Motors is shaping up, just to see how the earning profile of this has actually weighed down on the stock performance of the company out there. Tata Motors is shining in green for you guys. Eicher Motors and M&M. The second consecutive day, Auto Pack is completely holding up. Power Grid, Bajaj Auto and Hero MotoCorp. These are some of the other top gainers that we have on our list right now. BPCL, Ultratech Cement and Britannia. These are other top gainers that we have on our list right now. A little bit of surprise coming in from Ultratech Cement, right? I mean, it's after a while that I've seen Ultratech Cement making it to the top gainers list out there. If we talk about the nifty losers out there, these are some of the counters that, we'll be watching out for. We've already seen the gainers out there, but losers is something where I think most of the metal names will feature in out there. We're looking at top nifty losers out there. The gainers list is pretty much out there, but Tata Motors, like we anticipated, it was an EBITDA margin beat coming in on all the businesses out there. But nifty losers, Cipla, Adani Enterprises, IndusInd Bank, Tata Steel, Sun Pharma and Adani Ports. Well, Adani Group of companies is seeing a little bit of losses coming in on Adani Group per se. The fundraising approval proposal has been approved by the board. Shareholders will be voting in. So that will be, that vote will be conducted through postal ballot out there. That remains to be important. The pricing remains to be important. Supreme Court judgment of just having a 3-month extension to SEBI out there to conduct their audits and checks also is probably weighing down. The market hasn't taken it too well for Adani Group of companies right now, despite them going ahead and raising their fundraising out there, the plans. That remains to be seen. Prashant, comment on this one. Adani Group of companies is clearly where the focus is right now. Adani Enterprises down by 2%. Adani Ports also we're seeing some amount of losses coming in on that one. The development was big for these two, right? Fundraising after Feb, where they've resumed the Supreme Court ruling out there. How are the charts indicative right now?
So, Nickey, if I talk about Adani Enterprises, to be specific, I think a basic logic here has been a round number resistance of 2000. We tried to close above that, but we could not. So, I think it was a clear indication to book profits. And I think currently, if anyone is having position, your stop loss has to be 1890 in spot, 1890. And if you close below that, my suggestion would be to exit at this point of time. The overall structure looks weak and in a consolidation zone. So as long as it doesn't close above 2010-20 levels, I think there wouldn't be a sustainable rally as such. So it would be a good level to book profits.
All right, so that's the word coming in for Adani Enterprises at this point of time. Prashant, your view on HPCL and also Tata Motors. It's for the second consecutive session that we're seeing the auto pack probably doing well. To my memory, probably the run has been way longer than that. But when it comes to the opening bell and just at the start, we're looking at auto, companies just as the top gainers out there. Your assessment?
So if I talk about HPCL, I think it's trading above the resistance level of 260. We are currently around 265. So my suggestion would be to trail with a stop loss just below 260. That's say around 258. If anyone wants to buy a fresh position as well, 258 happens to be a 4-5 point stop loss, so you can definitely buy that. But my strict recommendation would be to trade this in cash, not in futures or options, because it's an emotional gap up. So better to trade in cash with a closing basis stop loss of 258.
Right, so that's the word coming in on HPCL also right now. In terms of the auto pack, Prashant, what do you like?
So I think in auto pack, Tata Motors definitely yes, but now there is a big gap up. So I think one stock that has been on my radar is Escorts. If you look at it, it's currently around 2050. So if you get it at somewhere between 2040, 35, that would be a good level to enter with a stop loss around 1995, 1995. And I think from here, Escorts may rally to somewhere around 2100. So if you get a slightly dip to around 2035, 40 levels, that would be a good level to enter in Escorts.
All right, so that's the word coming in on Escorts, where, a bit of buying opportunity playing out for Escorts. Auto space clearly is the one where we're seeing the traction coming in right now, and Tata Motors is also the preferable bet out there. If you talk about Eicher Motors at this point of time, that is also holding up for you. In terms of the other names that we have, something like an Asian Paints is doing well, HUL, Britannia. Also, the FMCG pack, along with auto right now, has been holding up for you right now. Prashant, your view coming in for HUL and Britannia right now. What do you like between the two and the immediate support and resistance level out there?
So I think between the two, definitely HUL, and it's currently at 2,645 odd levels. So for me, the stop loss would be around 2,610, 2,610, and you can hold on for levels around 2,700. Looks to be a good volume back breakout. So for sure, I think HUL stands out.
All right, so clearly the view is in the favor of HUL right now. Prashant, we'll leave it at that. And thank you so much for taking on the time and speaking to us this morning.
Thanks a lot.
All right, let's now focus our conversation more towards the fundamental side, macroeconomic data, FII trend, Karnataka Assembly election. What impact will it have on the equity markets? Let's actually have, let's find the answers of all these questions from Nitin Bhasin, the co-head of institutional equities at Ambit Capital. Good morning there.
Hi, Nickey. Good morning.
All right, I'm going to start off by asking you about your assessment on the Karnataka Assembly election. Sure, much of the street is just expecting it to be sentimental in nature. FII trend has been holding up. Macroeconomic data in perspective, Federal Reserve official comments, put all the cues together. Where do you think the market is headed right now?
Yeah, so it's a $1 million question. But before that, thanks a lot for having me on the show.
Pleasure.
I think it's a $1 million question. What's going to happen for the markets next 1 year, given all this, and also all of us entering into India's great election year of 2000, let's say the next 12 months leading up to 2024 union elections. I think, whilst sentiments are very good in terms of, India looking up really well in terms of growing last year very well, I think the key thing that we should all be very, very excited about is the yields in India, how they've actually come off, let's say closer to 7%. 12 months back at this juncture, all of us were staring at a materially higher 7.5 or in excess of that yields. I think that's a very good development for our country. And we've seen that in the last elections as well, that prior to union elections, rarely do yields actually inch up. They sort of remain benign. So that's a good backdrop, I would say, for the markets, at least in terms of how Indian macro environment looks like right now. Globally, macro may be in a tough spot, the recession in the US, but at least in India, it looks to be really good to me that, but at the same point in time, while it looks relatively good to the world, it is sort of a deceleration as well. Our macro economist, Sumit, also thinks about that the GDP perhaps should be settling closer to 5.5% to 6% this year. So you will have a year of tug of war where the interest rates in India perhaps have peaked out. But at the same point in time, the growth is sort of, let's say, still decelerating in many pockets or not reviving in, let's say, in the bottom of the pyramid as we have learned this K shape in India. So I would say that way, this is a two tug of war that we'll play over the next 1 year.
All right. Speaking of the markets and the growth being subdued in other economies out there, do you think India right now still relatively remains buoyant? Because the trend seems to be suggesting, at least when you talk about the FII trend, for the last 10, 11 sessions, we're seeing buying creeping in, a bit of pause there, again the buying resume. Do you think it's too early to kind of assess that FIIs are coming back to Indian equity markets over other markets? And by virtue of that, you might just see banking or the rate sensitives doing well. Specifically, when I say rate sensitive, financials doing extremely well because they're overweight on the financials. Your assessment?
Yeah, you're right that the FI, you've seen them coming back in the last few sessions. We've been highlighting that in the anticipation of the rate hikes, we had expected a lot of FI selling to happen, and perhaps that happened. And now the market is looking at could India go through rate cuts very soon. Our point of view was about 4-5 months back as well that we will perhaps see a maximum 7.3% as the yield, and perhaps today also we are holding the same point that we're not going back to 7.3 in a hurry at all. So perhaps anticipation of rate hikes and the global guys, the FIs are coming into India. That will keep inflows into the banking sector, which is always, as you rightly said. But at the same point in time, I'd like to highlight two things over here regarding the banking sector. In FY23, the banking sector posted an earnings growth of roughly in excess of 40%. But today, if one was to look at how the cost of funds have perhaps behaved, or perhaps a great year that we've had for the credit cost, let's say an unnaturally very good year for credit costs. You might not have a repeat of a 40% earnings growth, what you had in FY23, decelerating credit growth from, let's say, an 18% to a 15%. We could be looking at an earnings growth of not more than about, let's say, 12% to, let's say, at the best, 14-15% for the whole banking sector. So will the banking sector perform very good in terms of earnings performance relative to the other sectors? Clearly, yes, it could so. But will it repeat a very similar feat of last year? Unlikely. So hence, given the sort of close backdrop as we discussed, and relatively a good balance sheets, and perhaps I would say one should be an equal weight on the sector right now, but a more tilt towards large national banks and not so much about the regional banks or perhaps even the NBFCs presently. We'd like companies like Axis, ICICI, and SBI are the three names are the top ideas from our team presently for our institutional investors.
You pretty much answered all the questions that I had, at least when it comes to the banking space, before I could narrow down our discussion. But I'm going to chat about the real estate space, because you've seen that FII is almost, growing by threefolds in the period of last 5 years when it comes to the India real estate sector. For the past couple of days, we're seeing the sector, the index holding up. We're seeing that sales number also showing up, that strong demand which is percolating down on the street right now. However, in terms of the valuation, in terms of the stock performance, it isn't what the numbers are suggesting right now. What's your assessment? And do you still think there is more steam left for the real estate companies at the given valuations right now?
So as everything within India, there are two trends always what you get for every sector. At the same point in time when we are witnessing the number of inquiries perhaps for home loans decelerate or decline in certain pockets, we see the large listed developers doing really well. The kind of launches, the kind of record sales, what we're witnessing is very good. But there's a deceleration in the price hikes that everybody is taking. So I think one should be looking at remaining invested in the real estate, but not looking at most likely affordable housing, but more about 2 or 3 very good premium real estate developers, which are either a proxy of people moving upwards in terms of larger houses in the, let's say, markets like MMR, or for that matter, in South India, with the job creation in the tech services industry, especially because the captives does very well. So there is some steam left. But again, as I said, in most of the sectors, there are always two stories. In this sector also, we are witnessing some sort of a moderation, but some sort of a very good trend continue to playing out on high price point markets like Mumbai right now. Be stock selective in the sector, which is the case with every other sector.
What are the stocks that you would prefer within this space, Mr. Bhasin, if I may ask?
We are presently advising our institutional investors to look at companies such as Oberoi, Prestige. Those are the two ideas from the team right now.
All right, so Oberoi and Prestige are the two companies that we'll be keeping in focus and in the portfolios out there, if we are supposed to pick and choose between the real estate space out there. But auto space, that's perhaps one question that I had in my mind. OEMs did extremely well in this quarter. And day after day, we're seeing, the auto names being the top performers out there. You think there's more juice left there, valuations in terms of the earnings outlook, in terms of, sure, the chip shortages, that issue seems to be, percolating down a little bit, or maybe just receding a little bit from the sector. But overall, how do you view the sector?
Again, as I mentioned, again, two stories over here. Perhaps, in our portfolio is the model portfolio that we've been advising to the investors over the last 4-5 months. Only one stock that have we been carrying in the portfolio has been Tata Motors. Our point of view on the auto sector for the last 4 or 5 months has been the sector is pretty much overowned amongst the investors. The sector's estimates are looking very, very punchy. At the same point in time, you are witnessing very expensive valuations. So hence, in that sort of backdrop, where we have preferred over the last 1 year relatively inexpensive names, we were saying that one has to be stock selective, and we could only think of Tata Motors to add in the last few months. So hence, I would still say that not a very strong view on the sector, barring one name, where we saw over the weekend the results come and the management further indicating for a much better environment for the quarterly run rate for the JLR sales, and even raising the reason targets for the free cash flow generation over the next 1 year. So perhaps that continues. That is one of the key ideas of our auto team. But beyond that, we think that we are perhaps entering into a deceleration even within the CV cycle. We are not witnessing a material change in the two-wheeler space right now. There may be some incipient signs of a volume growth recovery in FMCG from Nielsen data, but we are not looking at a very, very strong and robust environment for two-wheeler sales to come back from the rural part of the country, which has been the key driver. So hence, again, within the passenger vehicles, within that, Tata Motors is what we like right now. I wouldn't want to say that the auto sector as a whole thing looks poised for a great run after very good 2 years, very punchy valuations, and over ownership amongst institutional investors.
All right, so that's the word coming in. We've discussed pretty much all the rate sensitives out there for you. Mr. Bhasin, last question that I have for you is your top pick and anything that has stood out for you in this earnings season out there that has surprised you positively out there.
Would refrain from discussing stock specifics, but at the same point in time, clearly what stands out is the strength of the hotel industry's recovery in the ARRs or the utilizations, especially for the premium and which shows a lot about India, that what is happening for the discretionary spending, high ticket items. We are still not witnessing an all-round economic recovery or consumption recovery. Perhaps the more expensive things are doing much better. That trend, we were hoping it to decelerate in this quarter, hasn't. So perhaps that's one macro trend for stock selection one has to keep in mind.
All right, so that's the word coming in for you guys. And thank you so much, Mr. Bhasin, for taking out the time and having this conversation with us this morning.
Pleasure is all that. Thank you for having me.
Right, pleasure. With this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much, guys, for watching. Please do post your feedback for us in the comment section below and follow us on the link at the bottom of your screen. For rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.